Did you know that India's investor base has grown 4 times in the last 5 years? That's right. But can you guess the current equities penetration in India? Well, it's still only 3 to 5%. In comparison, other emerging markets have about 30%, and the USD stands at approximately 60%. Demat account penetration in India is at 8% as compared to 32% in US. When we look at mutual funds as a percentage of GDP, India sits at 16%, while the global average is at approximately 74%. With India's population at approximately 1.4 billion and over 76 crore registered PAN cards, we have just 16 crore Demat accounts, and that's a huge potential for growth in the capital markets space. So, what exactly is the capital markets segment? Capital markets space covers parts of the ecosystem required for investing and trading: stockbroking entities, exchanges and data platforms, depositories, asset management companies, registrar and transfer agents, and wealth management firms, well captured by Tata Nifty Capital Markets Index fund by replicating or tracking Nifty Capital Markets Index. Over the last 3 to 5 years, these areas have seen impressive growth, whether it's mutual fund AUM, the number of folios, SIPs, or number of Demat broking accounts opened. But why is India's capital markets space so promising, and what makes the capital markets space unique? Well, it's backed by a strong GDP growth, shift from physical to financial assets, affinity for equity markets, and scope for increase in equities and mutual funds penetration. These are the key underlying factors for the growth of capital markets segments. Revenues of these segments continue to hold strong on account of increasing number of Demat accounts, broking accounts, increase in mutual fund AUM and MF folios. With more companies getting listed, number of folios per issuer is also increasing on the exchanges. More people are trading or investing into equities, and existing investors are trading more frequently. The segments within this space are typically asset light, meaning they have very low debt on their balance sheets, with top line rising and costs rising much less. These segments have witnessed improvements in margins and profitability. So why one should consider investing in capital markets right now? Earnings growth in this space is expected to remain strong. The revenues of these segments are indexed to growth in mutual fund AUM, folios, SIPs, Demat and broking accounts. This top line growth is expected to benefit from the buoyancy of India equity markets, with scope for increase in penetration of mutual fund investments and equity investments. Join the force that enables the capital markets and consider investing in the investment enablers today.
NFO opens on 7th October 2024 and closes on 21st October 2024.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.